Hey, can you hear me?
Yeah, I can hear you.
Okay.
Recording in progress.
Yo, what's going on? And welcome back to another edition of the Just Swing It podcast. It's 2022. We finally got that shit year of 2021 over with. Hope everyone had a good holiday. I'm Chris McBride. As per normal, I'm joined by Fat Baby and John, kinda. John has COVID and he's not feeling that great, so he is just running the ones and twos for this one. But that's okay because we got a very special guest on the show today. We're going to be joined by a Twitter celebrity per se. He's really kind of blown up in the last year or so. He's been on the show before, but we do have on the stock Parrot tonight, and we'll let him in a few seconds. But Fat Baby, how's it going? How was the holidays?
It was good. It's good. Going well. Had a good Christmas. Drank a little bit too much on New Year's, but that's the norm. What about you?
I didn't drink anything on New Year's. We kind of, we felt kind of bad too. We thought my wife had COVID as well, but we bought them like a little cheap test from the store, and it said it was negative. So she took two of them. I don't think they're very accurate, but if two of them says negative, probably so. By Saturday, we felt a little better. On Christmas, we probably drank a little too much. I think we probably went through 6 or 7 bottles of wine from like Thursday to Sunday. So of course we had help with that from family and whoever else was over. But yeah, as per normal, I watched the football game last night. It pretty cold up your way, seems like.
Yeah, no, it's freezing out there. I had to drive 2 hours north, and it was 0 degrees and dark, and at least it's not too snowy yet. But yeah, no, it's not nice here.
Yeah, so the crazy part here on Saturday, it was like 71, 72 degrees. It was 60 degrees yesterday. Woke up this morning and it snowed like 6 inches from like 8 a.m. to like noon. And now I think it's supposed to be 14 degrees tonight, which is it's crazy. I don't understand how it can be 70 degrees and then like a day later be 14 degrees. That doesn't make a lot of sense.
Yeah, no, I don't get it either. The weather moves in funny ways.
Yeah, but I guess we'll go ahead and let the parrot in. Try not to keep him too long. Probably got stuff to do. How's it going?
Good. How you guys doing?
Doing all right. Just so you know, John he's just running the production stuff. I think he has COVID, so he didn't feel too well, but he's going to record and I guess run all the audio stuff. But Fat Baby's here, and So we'll still have a pretty good conversation. I listened back to the last time we had you on today. I talked quite a bit on that one. I was going to let them handle it today, but I guess that's not how it goes. How's the holidays?
Man, they were good. It's been a good vacation. I needed the break. We had family in for most of it, so at one point or another. So we didn't. My wife and I were talking about it. We really didn't do anything but stay home and just visit with people coming in and out the door. So, but it was good.
Yeah, that's the way it is for me too. The thing is here, it's kind of like it's almost like work. I guess my parents got divorced when I was like super young, so we got like too many places to go to. We had to go down to my grandma's, which is like 2 hours away. The weekend before, then my parents lived like an hour and a half away, and then we had to host my wife's family, and then like my mom and my siblings as well the day after. So almost no break. And all the places are like just far enough away that you can drive for the day. So it's nowhere that you have to like stay. So which kind of makes it even more tiring.
Yeah, when we lived in Houston, it was the same way. All our family was there, so we'd go to 4 or 5 different places in a day or two. And now that we live 8 hours away, it's a little bit better. We don't have to. Now we're the house. If you want to see us, you better come here because we're not going there.
Yeah, you can drink a lot more when you're hosting.
That's right.
You ain't got to worry about too much.
Yeah, that's right. Except I had to cook for everybody, so I don't know.
Yeah, I did too, but it was pretty nice here. It was like in the 60s, so we made like pork tenderloins and stuff on the grill. And normally grilling means you're drinking even more than you would have.
Yeah, we did a lot on the grill too for that week because it was up until just 2 days ago. It was 70s, 80s. It's crazy.
Yeah, we were talking about that right before we let you on. I was telling Fat Baby here in Virginia, it was 72 on Saturday, and it was like 60 yesterday. It's like 15 degrees outside and 6 inches of snow today.
Yeah, it's crazy. Ours went from like 70 one day to 13 degrees, I think, the next day. It was nuts.
Yeah, I don't know how stuff happens like that.
That's a global warming, man.
I guess so. It doesn't feel too warm out, so I don't know. The dog likes it. The dog likes playing in the snow for some reason. I figured it'd be cold. But thanks for joining the show. Again, we'll try not to take up too much of your time. I guess you being a Twitter celebrity now, you got a lot of appointments.
I don't know about a celebrity, but I get a few invites now. I still don't do as much after hours. You're probably the one show I do after hours, really, because I try to keep everything in working hours for the most part to so I can keep the family time. But
yeah,
you guys are an exception.
Yeah, sounds good. I guess we get that. We've got in with multiple people, I think, at the right time before they blew up. So most people as of now still answer the phone if we call them. We'll see.
Yeah, I mean, I think you guys were the first podcast I did. So yeah, I'm excited to do it again.
Yeah, sounds good. So we'll try to keep it. I don't want to. Last time we kind of interviewed you and asked you about all the boring stuff like your trading styles, stuff like that. We'll try to not do that. Today we can just talk about, whatever anybody wants to talk about. If Fat Baby, if you have any topics you want to discuss, Parrot, if anything y'all want to discuss, we can talk about today. We can just chit chat for an hour or so and see what we can get into. But how was the year investing for you? You were a millionaire for a couple minutes.
Yeah, I've been a millionaire like 3 or 4 or 5, 6 times this year. It's been kind of nuts. Unfortunately, I peaked in February. I think a lot of people might have done the same, but yeah, I kind of stuck with the growth narrative, small mid-cap growth narrative, and it hurt this year. I ended up finishing actually down like 4% for the year. In between all that, though, I had some really good buys, some good trades. Learned a lot this year. Really got into options a lot this year. I finally got the ability to trade options in my IRA, which gave me the opportunity to do a lot more stuff. And so far, it's worked out pretty well. I've been able to at least turn a profit and learn a lot on the option side, so that's been good. Really have had a lot of success. Really, the biggest losses I've had on options has been on hedges, earnings hedges and things that were probably maybe ill-advised or I got out of too early. I had a nice hedge on SE for earnings, but I closed it the next day when they popped after, the next day. And then of course it's jumped, 100% or 50% since then. So, so some of the things I'm still, learning on my entries and exits and things like that. But overall though, I feel pretty good about the year as far as the learning curve. It always sucks to, the indexes did 20 something percent and I'm -4, but I think I'm in a good position going into next year. You just never know when the bottom's going to hit, when you're going to top out. So just trying to stick with the strategy. Hopefully it pays off.
Yeah, a lot of the trading for earnings, it's kind of pretty difficult because a lot of earnings are crapshoots. You can have good numbers, but the CEO gets up there and makes a fool of himself, and people don't like that, so it still tanks, or vice versa. Volatility gets ripped out of it.
Yeah, the guidance is what burns me a lot. Is sometimes I'll be like, okay, they're going to have a massive quarter. It would happen with Etsy a lot. I was like, okay, they're going to destroy what the market is thinking, and they would, but then they just give weak guidance. And then the market doesn't care about what you just did if you give weak guidance. So that's the one that burns me all the time. Is I like a lot of the companies that are conservative, Etsy, Facebook, that kind of stuff. But then if you try to trade it by earnings, you just got to predict that they're going to sandbag their guidance.
Yeah, absolutely. And it's good to talk to you, Fat Baby. It's been a while, so good to see you here.
Yeah, absolutely.
But yeah, that's true. And I was just kind of learning. I'm trying to work on a hedging strategy. I still haven't got like a full portfolio hedging strategy. I kind of gave up on doing that, mainly because I don't want to carry that much cash, I guess, to hedge with. But hedging individual positions seemed like a good idea, but honestly, it was a pretty good negative return for which I guess is kind of what you want. But you would with some of the price action like SE where it ended up going down, whatever, it's down now 30-40% or whatever it is. You would hope that hedge would have caught it, but then I got out of the hedge too early. So still working on that strategy and how I want to deal with that going forward. My bullish calls and puts I have done actually pretty well. My straight, calls and puts I've done quite well with. I think I'm about a 20% return or so. I haven't looked in a while, but so that's been pretty good. So I don't know. It's just still trying to figure that out.
Yeah, I'm not too big on hedging unless you can set it up in a way where you can like guarantee yourself that you're going to win. Like say you're up a bunch already, maybe you hedge it after you're already up or something like that. Every once in a while, if I'm betting on some sports or something like that, there may be a way to hedge where you can guarantee that you win, but I don't do it as much in investing. I guess there's some strategies where people set it up so they're actually basically delta neutral, which a lot of people who are selling the volatility do things like that, where it really doesn't matter whether the market goes up or the market goes down. They're just basically making money on volatility. I guess those people would be more of your hedgers.
Yeah, and I've tried some different strategies like that, there's a lot of people sell calls, and it's a good strategy, but it's just not something that I'm really loving to do. For one, it limits your upside, and most of the stocks I'm in, have the legitimate potential to go up, 15-20% tomorrow, and just because, and then go back down the next day. So, I don't really like selling calls. Plus, I mean, it's maybe kind of dumb, but it kind of screws up my accounting when I sell calls and puts. I have to keep a separate tab on how much that I went blank on what I'm talking about, but how much a margin basically I'm needing to hold for that, and it kind of screws up my numbers. So anyway.
So do you trade with margin ever?
No. No, I don't trade with margin at all. I'm not allowed to in my IRA, but it's not real margin. It's just cash that has to be held out for Like if I sell a put or whatever,
Mhm.
I will sell puts every once in a while. I like that strategy, but I try not to hold them a long time because the way that TD it calculates it basically acts like a negative margin in there because you have to have the cash withdrawn available to pay the difference or whatever. So um, anyway, it's kind of wonky the way TD does it. So
Yeah, no, it's sort of interesting. I think because there's times Peru's a funny one because he uses margin, but then he also hedges. I just think it's sort of an interesting combo between the two of them is the way he hedges, but at the same time using a lot of margin, sort of pulling in opposite directions. Which it maybe it works out for him. It just to me that would seem it seems a little confusing.
yeah, it is, and especially the way he does it. Twice a day, he flip flops between the two, and I think it's just because he doesn't give enough detail. I like Peru. I don't know. He gets a lot of slack, but I think personally, I just think it's how he communicates what he's doing because I think what he's doing, he's hedging, on some of these maybe these indexes that he thinks are overweight or whatever, and going long on some of the small mid cap stuff that he thinks might turn around in 22. So it's almost, I kind of did a similar thing without using margin or hedging, but I don't know, maybe I'll regret it, but I sold, a week ago, I sold Microsoft and Apple, both two very large positions in my portfolio. Um, just thinking that they're, kind of extended, maybe a little overvalued right now. And I think that 22 is going to look like we're going to get a rotation back into small mid cap growth. I don't know if Apple and Microsoft are going to, have a correction. They probably won't. I'm hoping they at least trade sideways for a little while, give me a chance to make some money in small and mid caps, and then get back into them at a similar price. So we'll see. Again, Apple hit a new high today, so right now it's not looking very good. But I still think that's probably the right move for the next 3 to 6 months.
So
Yep.
yeah, with Apple, I'm a rare Apple bear just because when you look at their multiple expansion, it's expanded a lot as more and more competition has come. And when you start to look at it, it probably was too cheap 5 years ago. But for a $3 trillion company, it's just tough to be trading at that multiple when they don't have quite the same execution, long-term tailwinds, things like that I think Amazon does, a few of the other mega caps do. So whenever I'm looking at Apple, I always have a hard time because it's an amazing company with crazy big moats and everything, but so much of their success has been driven by multiple expansion, which just from everything I'm seeing is if when it goes up, it comes back down. So it makes it a little tough for me to believe that Apple's going to stay at the multiple it has. Same with Tesla, same with a lot of the companies who've had that kind of expansion.
Yeah, absolutely. And I kind of maybe by mistake, I threw kind of Microsoft in the same boat with them when I got out of it. Markets were tanking. I'm looking for cash, and so those were a good place to get it. And I was actually up on both of those positions right at 75% in the last year and a half or so. So I ended up getting out of both of them. Kind of regretted Microsoft a little bit, but we'll see. Again, I still think it's the same boat. I think it trades sideways. I think Apple actually, like you, Fat Baby. I think Apple could come down some. Not anything drastic, but 15-20% easily. And I've actually got some alerts set. I think around, I don't know, like around 150 and 200. I'm hoping it stays in that range or goes down some more before I have to get back in it. I will get back in Apple and Microsoft both probably next year or this year sometime, but I'm just hoping it's at a similar or lower value.
Yeah, I owned Apple, and then that one day where it spiked up, from like 150 something or whatever to 170. I sold half of it. I kept half of it for now, but I think it'll come down a little bit. I was saying that a couple of weeks ago. I felt like once it actually hit the 3 trillion market cap was kind of it might start coming back a little bit. I think Tesla did kind of the same thing. Once it hit what was it, 1 trillion? It stayed like right there for a second, but then dipped a little bit. Of course, it's back up now, but I can't imagine it just continues up the way it has gone recently.
Yeah, absolutely. And that was it's a little bit of peace of mind. They're not going to run away from me. Apple and Microsoft both aren't going to run away. So they're not going to go up 25% tomorrow. So I've got a time to get back in, even if it's a higher rate, I'll do that. It was nice having that cash on hand, being a little bit more flexible during this, downturn. Of course, I didn't trade really anything last week. I think I bought some more Digital Turbine last week, and that was really it. They on the Google announcement, they're after they bumped 10% after the announcement, and then went all the way back into the negative, and I think they traded down another 5 or 10% the next day, and then that's when I bought in, or added to my position. That's really the only thing I bought in the last week. Everything's been kind of negative for me for a while, so just trying to add cash, keep adding to my conviction positions, and see where we go. I really still think 22 is gonna see it revert back to growth and small mid caps. It's just a lot of these small mid caps are trading, barely above cash. It blows my mind. These are companies that are growing, cash positive, cash in the bank, and they're trading at 1.2 or 1.5 times cash. It's just kind of crazy.
Yeah, I'm not sure what to expect in 2022. I think it could go, either way. One or two events on, good or bad could really change the outcome of the year. I would think.
I just feel like there's so much priced in. It's now that, first of all, I don't think we're going to raise 3 times next year. They're gonna be hard pressed to do that, even if they try. So I think at most we get 2, which is already going to be, better than what we're predicting now. I think inflation is going to come down some, and we're still going to have some inflation, but I think it's going to come down some. I just feel like all the negatives priced in. The indexes are up, but really, that's, we say that a lot. That's not totally true, but it's being driven a lot by the mega caps, Apple, Microsoft. But there's a ton of names underneath that have been basically in a correction since February.
Yeah, I think that big pullback in December, helped out a lot. A lot of things kind of dropped back to, more of a buyable range. I felt like there for a while, a lot of things were, too high to even think about starting a position in. And now I feel like some of those growth stocks are kind of back into where I can start to look at them.
Yeah, for sure.
And then, of course, every stock that I have that Fat Baby also likes gets destroyed. So I got to find a way to find some diamonds in the rough that he doesn't look at.
Hey, you just got to get into crypto, man. That's where
I have crypto.
That's where I've been making all my money.
Yeah, but you got into crypto 10 years ago.
Yeah, not quite, but yeah, no doubt I think there's still a lot of opportunity left there, though. And then the stocks will come back. I think a lot of stocks especially a lot of the growth ones, have just gotten beat up. But they had an amazing 2020. So sometimes you just got to zoom out 2 years, because I'm not an in and out type investor. So I got to take the 200% gains in 2020 and then take the not 200% gains in 2021, and then take the long-term view, because I don't want to be selling in and out, paying a ton of taxes, all that kind of stuff. At least not yet.
And what about Stitch Fix? It's going to go back up?
I think so. It's trading at 1-time sales.
Yeah, it's very low. I think somebody the other day invested $100 million or something like that. I gotta try to find what I was looking at.
Yeah, there was some working class or something.
Working capital.
Capital. Yeah, I don't know who they are, but yeah, I think it's interesting. Stitch Fix, it's always a dangerous play, because you're talking about a very difficult business model that they're making easier. But for a company that's sort of been touted the whole way to billions of dollars in sales, still should be growing 10 to 20%. Cash flow neutral to positive. They're not burning cash. It's not like Peloton where there's a lot of financial concerns there. Financially, Stitch Fix is in a good spot. So to me, it's just to see it shrinking down to one-time sales. And I do think that there's a path to profitability there beyond just being cash flow neutral as well. To me, it's just too cheap. But who knows? It's a difficult business model, and I think that's why a lot of people hate on it.
Yeah. So what's your thing on Peloton? Because normally you invest almost solely on the financials, but you just said that Peloton's financials stink. I don't know Peloton.
So their financials don't stink. They're just burning cash. So I mean that's never good. So they needed to do a share offering. They're losing cash fast, but they have a crazy strong brand, a cult following. They, on the other hand, of Stitch Fix, who's got a tough business model. I think Peloton has a very nice business model. And I think a lot of people are scared away from it from the fitness industry. And I just don't think that's necessarily a bad thing. I think people are going to shell out cash for their health. It's just there's never been the right company for it. So I don't know. It's sort of a contrarian play, if anything else. But we'll see.
Yeah, I traded Peloton for a little bit, or I've traded it a few times in the last year, 4 times actually. And I actually ended up positive on it, mainly because of the first trade. I bought it like at 99 and sold it at 150. Everything after that, basically I traded twice, broke even, and then sold for a small loss the last time and kind of stayed away from it since then. So, and glad I did. But I don't know. I'm kind of with Fat Baby. I think that, they've got a pretty easy business model. My concern though, is that things open up, people go back to the gym. You see workout equipment, on, the buy seller trade, your local Facebook page or whatever all the time. Not necessarily Peloton, but I think the social side of it is where they have the niche, but I don't have one, and I'm not sure how they're growing it right now. But I think that's the key for them, is the social side.
Yeah, I don't think the bikes are, have too much of a play. I think it's solely that subscription.
Yeah, I mean the bikes are essentially the customer acquisition cost, because they pay a lot in advertising, so they really don't make money on their hardware. But the subscription has a pretty low churn rate, and overall they do have very nice hardware. So if they can keep reducing the pricing on these bikes as they keep gaining scale, I think there's also some other interesting bullish plays that people don't think about for reopening in their Precor acquisition. If they can get into more gyms, if they can get into more hotels, they get more people on the Peloton bikes, falling in love with the Peloton bikes as part of reopening. I think we're going to be moving more and more towards a digital world overall, and you can sort of get that nice sustained growth. Because really, that's what I'm chasing after as an investor. The 200% growth, everything they were seeing isn't sustainable by any means. I'm looking for the nice 30 to 40% growth for a long time, and I think they can do that if they play their cards right and get people in front of the tread, in front of the bike, keep expanding their offering into rowing machines, get into all different forms of fitness, which they have really been working on. Is an interesting play. It's a little contrarian because there are a lot of things going against it, and there are a lot of dumb things Peloton's doing as well. So it's an interesting play, but I understand why everybody hates on it. But I still just look at it and look at the valuation and say, financially, it's not good. But what they need to do is clamp down on their expenses. As soon as they clamp down on their expenses, they can get to cash flow neutral very quickly. And then from there, it's just getting back to growth. And then all of a sudden you got the train back on the track and you have a subscription business model with really high margins, a cult brand, and you're getting it for a price to sales of 2.5. It makes sense for the risk to me, but yeah, there's definitely crazy risk.
Yeah, I think that's a good point. If Peloton can get these things into, your standard hotels and places like that, where people who wouldn't have ever interacted or have used one, has the opportunity to use it. It may lead to them, falling in love with it, buying it, or whatever. There's an apartment complex they just built kind of like in the town where I live, and I saw an ad on my phone where it was like a drone flying through this like new apartment complex, and they had this humongous gym with like 15 Pelotons and like a big screen and stuff like that. This place looked fantastic. I can't imagine what college student or whatever that lives in this town is going to be paying to live there. But yeah, it looked crazy. Let me ask you this, maybe is it, you were talking about them getting into more, machines, rowing machines or whatever. What about, is there a way for them to, get into more, pushing the subscription rather than even, selling the equipment? Like, can they make their exercise subscription in a way that you can use it separately from even owning a Peloton bike, basically?
Yeah, you can do that right now. So they have yoga classes. They have all different kinds of classes. So for instance, through my credit card, I get the Peloton app for free. So me being the cheap ass I am, I don't have a Peloton. I've got a $200 stationary bike with a 6-year-old TV sitting in front of it through the Peloton app. And even that, Peloton's going to make money off of it. Even the cheapos like me, Peloton's going to be making that sweet subscription money on. So that's where I think a lot of people view it as a hardware play when really it's a subscription play. And that subscription is where they're going to make all their money if they can keep the churn low enough, which they have.
Need to keep that is really like they really need to try to, and I don't have one, so I can't say that they're not doing that, but they really need to try to gamify it, really, right? So keep people hooked and coming back and whatever that means. But I know they have like trails and stuff you ride and things like that, or ride with other people. But
I think it's kind of they kind of have that now, right, Fat Baby? It's kind of, you can get on there and like compete in like races and get points or something like that.
Yeah. So there's a lot of competition aspects to it. There's a streak aspect to it. So they have certain parts gamified, but they also are working on different legitimate games for it. I believe they've only prototyped them, but not rolled them out so far. But I've definitely seen a few of the prototypes leaked or whatever, where they're working on just the random biking games. As you bike your bike faster, it starts to go faster, because I mean it's got everything you need for it. So yeah, I definitely agree. As they continue to gamify it, and I think this is just another example of, in the future, when things are weird and
the metaverse.
If the metaverse does work out, then I think that's a stock that goes really well with it, Peloton, because of the things they're already working on, the connected fitness nature of it all. As the metaverse hardware of AR and VR starts to get better, I think that could be combined with Peloton in an interesting way.
Yes, speaking
That's
of,
a good.
Go ahead.
Okay. I was just saying that's a good thought. I mean, you see like, Ready Player One, they've got these treads and stuff, multi-directional treads. You can see Peloton doing something like that maybe, or, even adding some controls on the handle on your bike, so you could, have a controller and play games, racing or something like that, where you can move side to side with the controller and pedal for speed. I don't know. Yeah, I can see where they could do some stuff there.
Yeah, speaking of beating down stocks, Michael Stratton's watching the show, and he wanted to get your guys' thoughts on a couple of the stocks that's gotten beaten down here recently. One of them was Peloton, which we just touched on. But he's also wanting your thoughts on Twitter and Planeteer. You guys have any thoughts on those? We know Twitter's got the new CEO who is questionable. But I know Fat Baby, questionable character. I don't know about his business style, but Fat Baby, you seem to like him because of he was the chief technology officer or whatever before, right?
Yeah, and so for me, I mean, you just got to really wait it out and see because this is a guy who's spent most of his career at Twitter, climbed the ladder at Twitter. So you don't know what kind of leader he is, how he's going to react to a lot of kind of things. But from a technical end, it's probably not bad for Twitter, especially because, I mean, we're all on Twitter way too much. The ads are terrible. There's a ton of technical room for opportunity for Twitter overall. So I think having a technical leader, if they can figure out all the people stuff right, and it seems like they have, there's definitely opportunities in there. I think Twitter is interesting right now because I think it could, even if it doesn't keep growing its users, there's so much more opportunity for monetization. I don't know about you guys, but I signed up for Twitter Blue. If they increase their advertising spend, if they get spaces going like it can, I think right now it pains me a little bit to say it. I see a lot more traction for Twitter Spaces than I do for Spotify Green Room. I think that could switch, but I think right now in the live audio space, Clubhouse is dead and Twitter's leading. I don't know. Parrot might have spent a decent amount of time on Spaces, so we can definitely get his thoughts on the stock and Spaces and all that kind of stuff too.
Yeah, and we had Gav from Wolf on recently, and he's hosting 40, 50 spaces a week with 5,000, 10,000 people, and he talked about some of the things that Wolf Financial was doing in conjunction with Twitter. If you're watching and want to know more about that, you can go back and listen to that episode. But the spaces seem to be getting a lot of people, in there, and listen to not really podcasts, but being able to listen and interact, with people, right then and there.
Yeah, so I'm a huge fan of Spaces. Not near the experiences Gav has. We're really good friends. I like him a lot, and I've been on some of his, and he's been on some of mine. But I actually just recently talked to him last week as well, and he was telling me about some of the stuff they're doing too. So a lot of big things. He's actually, I don't know if he told you that, but I think he might be their biggest Spaces host.
I don't know if he said they. Yeah, I don't remember if he said he was the biggest. I know he dropped some sort of thing that he wasn't really supposed. He was real cautious about what he said about it because it was I don't know, it's proprietary, and I think it was just now all the legal stuff was working itself out. But yeah, he did drop something on our show about something he was doing with Spaces.
Yeah, I'll be careful what I say then, because I don't want to do anything that I shouldn't say. But
yeah, we had one about a month ago, and like I said, he said it on the show, but he wouldn't. He didn't want to discuss it too much. Like he said what it was, but he didn't want to go in the weeds yet. But
sure,
it should be about ready. Yeah, I think
he's one of their biggest hosts across all genres, platforms, or whatever you want to call it. But and he does a great job, by the way. Yeah, I mean, I'm a huge fan of Spaces. I kind of agree with you. I don't. I think that might be one of their biggest, bull cases is what they do with that. But you mentioned it, Fat Baby. There's a ton of opportunity for them to monetize better than they are, and really not even affect the user experience that much. Just getting better at advertisement placement. I think they talked about rolling out super follows. You've seen a couple here and there, but they haven't really done that across the board. I'm not sure what the holdup is there. They are doing ticketed spaces, but I don't see anybody really charging for a space. So I'm not sure how that's going. So they're trying a lot of stuff, which I like to see, but until they actually hit something, I'm still not a buyer of the stock. I need to see him actually do something. I'm not a huge fan of the new CEO, but we'll see. We'll see what he does. I think you made a good point that he is from the tech side. That might help, but the way that they plan, I like the features that they're adding. but the way that they're trying to monetize just seems very clunky, very cumbersome. Even Twitter Blue is just, I don't know. I just don't see that being a huge revenue stream for them. Um, so I don't know. I'm still not a buyer yet. I'll just keep watching. I love the product. I just hate the stock.
Yeah, and it goes back to like we were talking about the new CEO being, from the technology side, and they're adding all these new features. But I mean, that's kind of been the thing with Twitter all along is, everyone uses it. Everyone likes using Twitter, but they don't know how to monetize using it. It's always been, people use it, but, it's never been really a good investment. And I'm not sure if it gets how much better it gets with, the technology guy in there. It may add all these new features, but, are they going to find a way to make money off of that?
And I mean, so part of the thing with Twitter that people forget is they look at the Twitter chart and they say, this stock is trading sideways since it IPO'd. But what people don't look at is when it IPO'd, it came at 60 price to sales. So it was just trading at a crazy valuation that unless it monetized like Facebook, it was never going to be able to support. So now when you start getting into the single digit price to sales, that's when all of a sudden a little bit of monetization, user growth, onboarding experience, all that can go a long way. But yeah, I definitely get it. There's a reason to doubt Twitter, but my bull case is if you look at the app in the past year, what they've done in the past year is more than what they did in the past 6 or 7 years before then. So there's traction. Whether that traction leads to any actual monetization, I'm with you guys. I barely see any super follows. I barely see any ticketed spaces. But there's a lot. I like the experimentation, and I think if they continue at this rate of experimentation, they'll find monetization. The problem is historically, they always tried to monetize through ads and licensing deals, and they were terrible at ads. So hopefully they get a little better at ads and then keep experimenting because the platform's too powerful for the monetization level they got right now. They just got to find how to monetize.
Yeah, I think that's a good point about the, when they IPO'd, they were trading so much above, where they should be. And that's kind of a good point for you could say it about a lot of stocks, out there. A lot of the new growers, like one, for example, that I like is Penn. It went up so fast that, it's probably going to trade sideways for a while because it's got to catch up. I think there's more than just Twitter that we can point out that same type of thing, same type of example for. And the other thing I think people, that gets people on Twitter, I think people compare it to Facebook, but Facebook is a lot more than, I guess it's Meta now or whatever, but they own a lot more things than just Facebook. So it's a lot larger of a company than Twitter. But then when people compare them, they get the wrong idea, I think. But it is at its low. It's 52-week low right now, pretty much.
Yeah, and I mean the comparison to Facebook is really the ARPU. So looking at the revenue per user, that's the comparison to Facebook to say, hey, Facebook's a company who got its shit in line. If anyone's able to do that, there's a lot of opportunities without growing your users to increase monetization. But Twitter's never going to monetize like Facebook, not in an ad sense. It's just a different kind of platform, but definitely a ton of opportunity, but another one where there's a lot of risk in Twitter because they're not the best executors historically.
Yeah, what do y'all think about? Do you think the way they're handling, I guess some of the I don't want to make this political or anything like that, but handling some of the political things of banning people and that sort of thing. Do you think that helps them or hurts them? Because it kind of used to be, kind of a safe space where people can put, their thoughts on either side. But, here recently, some of these social media platforms, it's kind of getting where you talk about this topic and you're on the wrong side of it, you get suspended or banned or whatever. Do you think that helps or hurts them? I think there's people who could lean on both sides of the fence there.
Yeah, I think there are people on both sides. What blows me away is the lack of consistency. I mean, you can log on and watch hardcore porn on Twitter, but you can't say, even by accident, right? You can't say, I'm gonna beat somebody or whatever. Just an off the cuff comment, you'll get banned. So it's really just lack of consistency. I think and not just Twitter, but all these social media sites need to be consistent with how they enforce their rules.
Yeah. And I mean, for me, the little libertarian in me says it's not right what they're doing. But in reality, when you step back and look at it, they banned the president and nothing happened. So Twitter can do whatever they want. It's not going to matter. Banning.
What if they ban this president, the current president? Obviously, he doesn't have a Twitter, but let's say the current president had a Twitter. Would the same perception occur?
I think after a while, no one would care. I think there's enough content on Twitter where unless they're mass banning everyone you follow, your one name off isn't going to make any difference. How many other times have they tried to get other social sites going and it just went nowhere? Just because everyone knows the same thing's going to happen. And it is a very tough line to walk, the safety versus the rights of free speech. It's a tough line to walk, and I don't agree with a lot of times the way they walk it, but they're never going to. I think that was the most extreme case of a ban that likely will ever happen. They banned the president. It's pretty crazy, and nothing happened.
So what about what's y'all's thoughts on, I guess, shadow banning? So it depends on who you ask. Different people think different things on whether it's occurring or not. But
I think, to me,
it might be.
I'm sure that's happening, but to me, I've even experienced myself that where the algorithms line up and it seems like I get zero engagement for a couple of days or a week or whatever. And I don't know if it's just, I know for me, like being off for a week, I don't post as much. I'm not on as much, so I don't get as much engagement, which is natural, right? But it'll take a week or two for that engagement to pick back up. So I don't know if it's truly shadow banning or if it's just the algorithm saying, you're not as active, you're not getting seen as much or whatever.
Yeah, I'm not sure. What about Planeteer? I don't really look at that one as much, but do you guys have any thoughts on that one?
I own shares. I bought the IPO at like 950. I sold half at around just under 30. So basically I'm on house money now. Just kind of riding it out, not really doing anything with it at the moment. I like the company, I like the product, I like what they're doing as far as their growth, but they're giving away too much in incentives. They're giving away stock to employees, and I think that's why it's trading where it's at. They're just, all their profits are going back to the employees, which is great for them, but not so good for the shareholders, the rest of the shareholders. So to be honest, it's kind of on my bubble list. If I needed leading money, it'd probably come off. I'm still up like 100%, I think, or 95% for where it trades today. But it's just kind of sitting there. It's I don't love it enough to add more back to it at this level, but I don't hate it enough to sell it. So it's just kind of there. Yeah, I said a lot of words. It probably didn't say anything.
Well, Palantir is just a confusing stock. People love it, but when I read up on it, it's just like there could be something crazy there with all the data. The CEO seems a little crazy in an okay way, and it's got the teal relationship to it. So there's a lot going on there. To me, it was just way too expensive for a while. When you look at it, it's just there's no way it can support that. But now it's starting to come back down to earth. It's interesting. It's going to take me way too long to understand what's going on and be confident enough and to own it and not panic sell it. But it's interesting, and there's a lot of people. It's sort of got a cult following on FinTwit. People love it. I don't fully understand why. Maybe it's the teal thing.
Yeah, a lot of people love it. So you would think you'd get more pop from that, but just really hasn't. Ever since it hit that $28-$30 a share, it's kind of traded out. Well, I guess it ran up to 40 and came back or something. I haven't even looked at it, but I have to look now and see where it topped out at. Yeah, it ran up to almost 40 and came right back down and just been trading sideways between 28 and 20. But yeah, I'm kind of like, it's kind of basing now where it's at. It's probably not a bad spot if you're looking at it, looking at getting into it. It's just, I'm just leery about the stock compensation and how much they're giving away there. It's just, when's that going to stop? When are they going to start paying shareholders? So.
Yeah, I haven't messed with that one at all. That's there for a while. That was the one you seen people pushing the most. I felt like on Twitter was that one.
Yeah, I mean, honestly, I'd probably be out of it already, but I got in at such a good price. Like, I got in on the IPO and they opened at like $9.50. If I remember right, that's one of them that opened like on a big red day, like IPO'd on a big red day, and so it kind of traded down at open, and I was able to get in at a pretty good price. To go back and look, I think that's what happened. Yeah, the first day was red. First week was red. So, those are my favorite IPOs too. The popular IPOs that open on like big red days, really fun to buy.
Yeah, you were talking about.
That's what.
Go ahead.
I was saying that's how I got into Palantir. It was kind of popular. The IPO was kind of popular. People were talking about it, and it opened. I think the market was down. I don't remember now, but it was down a few percent that day, maybe more. And so when it IPO'd, it traded down, it opened down, and so I bought into it. So I bought a few IPOs that way, and then got back out of them on the reversal on the pop. So
yeah, that's one of the things you talked about last time trading the trading IPOs. Is there any IPOs that you've messed with here recently?
And not really. I've got a big enough headache with trying to track what I've got in front of me. So no, I haven't really been looking at a lot of IPOs. The only one that it's not really an IPO, it was a SPAC, the dreaded SPAC that I got into was CTV. It's an ad tech company that I really like. It's Innovid. They more focus on kind of infrastructure, and the way I kind of think about them is kind of like the Nelson's rating system, but for digital advertising. So like digital TV, Roku, things like that. And so I kind of I like those guys, but haven't done well with them. I'm in at where am I in at? I have to look. I think I was in at 10 originally. And this is one of those TD glitches. When it crossed over, it didn't bring my trade price over. But I think I'm in at like 8 something now. I averaged down a little bit, but it's trading down like at $6, $6.25 today. I was actually going to add to it 2 weeks ago, and I missed the what was it? It was trading around this price, around 6.30 or 6.50, and I missed the buy at a couple of cents short, and it ran up to 7.50 or so a couple of weeks ago. But now it's back down below, so I'm kind of glad I stayed away from it. I think it's going to take an earnings or two to get this one moving, but I do really like it. They're cash flow positive, and so anyway, that's the only one I've been in there recently. The only kind of new stock. It's not really an IPO, but kind of similar.
I got you. So one of the things we've been doing recently on the show is we'll pick some, something somebody tweeted, and that would be a good discussion. So we'll do that on this one. I saw one from Wolf Financial. We were talking about them a second ago. But they basically put up a poll for asking what sector do people think will perform the best for 2022, and they have technology, energy, healthcare, financials. For you guys, what sector do y'all think will perform the best this coming year, whether it's one of those four or a different one?
So for me, I've been preaching ad tech for like a year now, but I think eventually that's going to be true, right? If I keep saying ad tech, it'll eventually happen. I think ad tech's going to have a good year though. Really like Acuity Ads. I wrote a newsletter on them back in November. But there's a lot of ad tech that you guys probably already know that I like that sector a lot. So I would say for me, I would probably pick them. But energy should probably do pretty good next year. A lot of sectors, I think it's going to be more growth, like I already mentioned before, than any individual sector, but maybe more growth and small mid caps versus the larger cap companies.
Yeah, I agree with you. I personally think it will be energy. I think some people get the wrong idea. They look too much into like gasoline and that sort of thing, which I guess is kind of energy and that sort of thing. But there's a lot more to that sector than just that. I work for an engineering company, but we work mainly in the energy sector, and our stock has been booming in the last year. We're getting tons of jobs. They're building tons of new power lines all across the country. So those companies are doing really well, and I don't see any reason why that would slow down. Because it's kind of like all this new technology and stuff. You have to have the means to run it. All this new things that are being invented. It takes more and more energy each year. I mean, we're even getting into kind of the environmental. The electrical vehicle. The charging stations and stuff like that. We don't typically do stuff like that, but we've been asked to manage some of the, I guess, implementation and building of some of that sort of stuff. So just personally in my field of work, I see a large growth in the energy sector.
Yeah, and I mean, energy is if you're in the business, I'm in the energy business as well, and so it ebbs and flows about every 5 years. You're going to get peaks and valleys. We've had our valleys, so it's going to slowly come back. And I think next year is probably I'm with you. I think it's a good year for energy. Probably the next couple of years is going to be good years for energy.
Fat Baby, what about you? What do you think is going to perform well this coming year?
I'm still sort of bullish on fintech. I think fintech could have another great year. I think there's just continued drive towards everything in that space, and I think the valuations are pretty reasonable at this point, where there could be a lot of opportunity in there, whether it's Square, PayPal, Robinhood. There's a lot of options in there, and I think that could be bullish. And I think social media as well is just a continued push is going to keep coming. I think there's a lot of doubts, especially in things like IDFA, user growth, all that kind of stuff. And I think it's just people's screen times are just going to keep going up and up. The times on the platform are going to keep going up. And we're going to keep trending more and more towards a digital society. So I'm sort of thinking fintech and social media are the two major ones I'm looking at.
Yeah, for me, social media falls into that advertising space. So yeah, I'm with you there for sure. That's where they're making their monetization mostly. But I agree with fintech as well. I got Square and PayPal, and really SE is one of the bullish cases for SE. Really is the fintech arm that's just now getting kicked off. So yeah, I'm very bullish there as well.
Yeah, so we got another question on YouTube, and we're going to have to, we're not going to be able to answer it exactly, but we can, kind of answer it a little differently. It's a question from Shadrick Kepley. I don't know if I pronounced your name right. If I pronounced it wrong, I'm sorry about that. I'm just a country boy from Virginia, so you'll have that. But they asked, "Hey guys, great show. I'm all new to future prop trading. What's the best advice you can give someone, or that someone has given you when you first started?" First off, I'll start by saying John is the only prop trader on the show, and he currently has COVID, isn't feeling all that well. So if you want a better answer, you can than what we're about to give, you can DM us on Twitter, or send us an email at keepswinging@gmail.com, and he can get back to you and maybe give you what his answer to this would be. But in terms, so none of us are prop traders, and also none of us trade futures. But we're all investors, all traders, and it kind of goes hand in hand. A lot of it, kind of goes hand in hand, whether you're trading equities or futures or whatever. So what we can discuss on the show, or what we can answer on the show, is advice someone gave us for just trading or investing in general, I would say. And then if you want to get with John, he can maybe give you more of a specific to future trading or prop trading. But one of the what I would say is most important is to do your research, not get like pulled into some big news headline or something like that. As you've probably heard before, once it's news, then you can pretty much sell the news. That's because once you know about it, that means all the hedge funds, all the big time investors, they already know about that. So it's going to already be priced in before it gets to retail investors. So you can't really make too big of a play off that. But I would also say consistency. Find a strategy that works for you and stick to it, and do it every time until it doesn't work. And then once it doesn't work, review that and make the tweaks to stay with whatever the current market time is, and but mainly just staying consistent to what's working, not trying to get too aggressive, or don't try to be too conservative. You can't ever make any money if you don't have some risk. But if you have too much risk, you'll end up losing more money than you make over time. But that's what I would say. Parrot, is there any advice you would give to someone who's new to investing or trading, or the best advice someone's given you?
Yeah. So first of all, it's a great question, and it's a question that I actually wanted to ask John, but when I got here, he's not available because we talked about that kind of a little bit on my last time on the show.
Yeah, and of course you're welcome on the show anytime you want. So we record on Tuesdays at 8 normally. Anytime you want to come on here and just chat it up, you're welcome to come on and chat it up. I'm sure John would love to discuss future trading with you.
I appreciate that. And yeah, I know he's pretty excited about it the last time we were on. And I actually since then got the option in my IRA to trade mini futures.
Yeah, before you get to that, I don't know if you know that, but John's he's actually a funded futures trader now. So, a company's given him, I don't know what it is, maybe like $50,000 account to trade. And then, he trades and he gets to keep, X% of whatever profit he makes or whatever. There's like guidelines and stuff like that. But yeah, he's actually kind of, doing that more as a job now, I guess.
Wow. No, I did not know that. Maybe I need to give him some capital to work with. But I did just get the access actually a couple months ago to mini futures, and haven't really dug into it, and was going to ask John some questions while I was here. So that's a great question. Glad you brought it up. Unfortunately, I can't answer it because I don't know anything about it either. But from just a general starting out standpoint, regardless of what you're starting to do, I just really started seriously trading options this year. And really, my advice is to start small. Make sure you learn the ins and outs of the actual technical, how to place trades and get out of trades, those kinds of things. Maybe even try a paper money account. You don't have to do it for a long time, but just make sure you're fluent in what the transactions look like, how prices move, that kind of thing. And then start small. Just you're not really going to learn until you get money in the game. At least in my case, and usually it's still on the losing side before I learned my lesson. So start small. Don't try to over risk. Those are really the biggest things for me. Even now that I feel like I'm pretty confident in what I'm doing, I still try to keep my bets at a reasonable level and not put more money out there that I'm willing to lose, whether that's options or swing trade or whatever it is, because things can go sideways quick. So that's my advice.
Yeah, and I was about to say, bring that up if you didn't mention it, because I remember you mentioned that on the show before, and maybe you talked about it on Twitter as well. And that goes the same for me. You can paper trade or kind of look at it, simulate things, do that sort of thing. But until you're actually doing it with actual money, or at least in my case, you're not going to be putting in the same amount of effort you would, or sticking to the script, so to say, as much as you would be if you were actually doing it. So I feel the same way, with investings, whether it's futures, options, whatever. I did the same thing with sports gambling. I took when I first started gambling sports, I took like a year and a half, and I would literally just bet like $5 on games, just solely to have something on the line, thus so I can teach myself the ins and outs of what's happening with the lines and that sort of thing. And same thing with options. Just stick super small and see what happens. I would say starting out, you want to be wrong some, so you can see what happens on that side as well. If you start out and you start getting things right away, then you're only getting one side, and you don't really see the other side.
Yeah, I mean, then 2020 happens, and it takes all of 2021 to get rid of those bad habits. Right? I mean, if you start investing in 2020, everything's a winner, right? No matter where you put your money, you were winning. And you develop bad habits there. So yeah, it's important to lose early, to get an idea of what that looks like and what you're doing wrong.
Yeah, but I think having something in the game and actually doing it is how you learn the best. You can read whatever books you want, Warren Buffett books or take Gumroad courses or whatever the hell it is. But until you're actually doing it, it's not something I feel like you can just read and learn what to do. You have to, you kind of got to do it and practice that, and learn by messing up, learn by getting things correct. Fat Baby, what about you?
Yeah, whether it's prop trading or investing or options trading, I think the best thing you can do is keep a trade journal. Just write down why you bought it, why you sold it, any mistakes you made. And then once a month or so, or once a quarter, go in and just review all your past trades and try to pull out common themes of mistakes, wins, errors in your thought process, all that kind of stuff. It's how you grow, because a lot of times we can trick ourselves into thinking we're geniuses in 2020 and think we're idiots in 2021. But as you keep building that data, you can start to pull out ideas and slowly whittle down to the truth of what are my strengths as an investor, what are my weaknesses, all that kind of stuff. So I think that's one key one. No matter what you're doing, it's a great growth opportunity.
Yeah, I think a lot. Go ahead.
I was gonna say that's a good point. It's something that I didn't do at the beginning. I didn't start really journaling until this past year. And I think it really has helped a lot, writing down, what happened, why did I make the trade before I made it, and then go back and look and say, okay, why did I get out of it? Where was it at? One thing that I'm not as good at doing is going back and looking at where the price goes after the trade to see if it was the right decision or not. And I've had mixed results on if that's a good thing or not, but or mixed opinions, I guess. But journaling is a good thing, and that's where I figured out really, that I was not doing a very good job of hedging positions. So the journal pays off a lot. So I don't do that as much anymore.
You should check out my portfolio tracker and steal that if you want that, because that's what I have in mind. Is I've got live formulas to bring in the current stock price. It's just a Google sheet, and so I say what I bought it at, what I sold it at, then I say what it's trading at right now. So sometimes you'll look back and you'll be like, oh man, all these reasons for selling. Maybe I got to look at those because it will tell you in dollar amounts. Here's what I've missed out on. So to me, that's helpful, and it's super easy to do too in Google Sheets.
Yeah. With that, I think
I'm sorry, Chris. Go ahead.
Oh, you're fine. I was going to say with that, I think it's it's also a slippery slope on at least the once you sold and made money side. So if you made a trade and you hit your profit target, whatever that may be, and you sold, and then you're continually looking at why, now this is X amount higher. You can drive yourself crazy and get yourself into, kind of bad habits because you set that profit target at that position on purpose, right? Now, if you're doing it over and over and over again and seeing the same thing that you're always like a little short, then maybe you can, change up how you calculate your profit target. But what you don't want to do is, start looking at that and then, well, I need to stay into this trade longer. And then all of a sudden, it doesn't continue up and you just lost out on all that, the profit that you would have made if you'd have just stuck to, what you were doing.
Yeah, that's a good point. That's why you get mixed results. It really depends on or I guess mixed opinions. It really depends on the trade you're making, why you made it. And it's good to document your reasons why you bought it, what your expectations were before you sell. Those kinds of things. And it's one of the tough things for me to do, honestly, especially on like some of my swing trades. I have soft targets, but I don't have a hard target. I just bought Carnival Cruise Line a week or so ago, and I have some soft targets where I think it's going to go, and I'll be keeping an eye on it. But I don't have a hard target that I'm going to sell at, it's at 21. I'm not going to sell at 30 necessarily. I might sell at 29, might hold it till it, to 40, but I think it could, hit any of those targets next year. So it's kind of tough for me sometimes. And it's really, I get in trouble actually, cause I'll be looking for a number, and, I've said this in a couple of my newsletters is, if I start really the key factor for me is if I'm looking at price, every tick of the price to see whether I want to buy or sell something, then it's time for me to move on. So, if it's at 29 and I'm going to sell as soon as it hits 30, I'm just waiting. I'm watching every tick, or the first time it turns negative, I'm going to sell because I don't want to give it all back. Then it's time for me just to go ahead and sell and get out of it. And that's kind of the judgment factor that I use when I'm ready to buy or sell something, or really on the sell side. So, but to your point, it is kind of hard going back and looking because it might still go to 40, but it could have still been the right move for me to sell at 30, just for my own, peace of mind. So.
Yeah, and I think it really goes, it depends on what your goals are and what your strategy is. So for example, Fat Baby is he'll trade like off the wall options that, only lunatics will trade. But besides that, he's, a long-term investor. When he buys something, unless something like drastically changes, he doesn't plan to sell it. Whereas John, has a very strict, system. I'm long here and I'm long until, we hit, this percent or something, changes, I guess, so to say. But I guess one of the ways to, get out of, just, say you set a 20% profit target, to get out of just like staring at it and like driving yourself crazy or whatever is, take advantage of using, those limit orders or, percent to close. Most brokerages will, you can set up, I want to close at X% profit or whatever. And then, you don't have to stare at it to see whether it's going to hit that. Now with that, you still got to, watch it to make sure nothing changes. Because you might need to adjust, your profit target. But I think it really depends on your strategy. If you're a day trader, you need to be sticking pretty strictly to, when it hits your target close, because you're going to do so many more trades that the quantity, it doesn't matter whether you miss out, on a percent or two, here and there, because you're going to do trade after trade after trade. You're going to have losers, you're going to have winners. Whereas, and then on the other side, like a super long-term investor, you're really not looking at the profit as much. Now, where it gets tricky is, kind of like myself or the Parrot, is that in between level where you're not looking to keep something for 20 years. You are looking, to trade it, but whether that's in a month or a year, it really depends. So I don't know. It takes some, getting a feel for it, and, kind of, as the Parrot said, do what makes you feel comfortable normally, and then don't harp over if you miss out on a little bit here and there.
Yeah, I try not to beat myself up on gains ever. If I took a profit, even if it goes up another 100%, I've made a profit. I can live with that. You can't go broke making a profit. So do my best not to beat myself over that. But you're right. It's kind of tough in my account because I have all those positions, right? I have long-term positions I don't plan on ever selling. And I have positions that, very short term, typically not weeklies, although I'll play some weeklies now and then. But typically, I'm on at least a couple months out on options. But I try to be very clear when I'm posting about those, on my Twitter account or Common Stock, where I post a lot of my daily trades. What my intention is for the trade when I post it, so that people don't get confused or don't get, they get upset. They buy it and I end up selling it the next day or the next week or whatever, because it really, my whole portfolio is like that. Things change, and your perception of it changes. New information comes in, and sometimes we change our minds, we change our opinions. Got to get out of it. So.
Yeah, Fat Baby, you have any more you want to discuss on that concept?
No, I mean, it basically just comes down to it's all depends on what your strategy is, and then really going from there and just keep learning.
Yep, sounds good. I guess John wanted to ask a question. He wanted to know, did you trade anything other than equities? Did you trade any commodities, or I guess bonds, or really anything not, your typical stocks? I would think probably not, but I don't know. Did you?
Yeah. No, the only thing I traded outside of maybe I didn't is just a little bit of propane and natural gas a month or two ago. But I did it through a fund. I have to go back and look which ones they were.
UNG. So was it UNG for natural gas?
Probably. Let me go. I think I can find it here real quick.
I think that one's a typical one. That one's a pain in the ass to trade.
So let me look. It was no, it was let's see. Oh no, actually I just bought Oki for natural gas, and I bought RRC for propane.
John wanted to get in that he hates natural gas.
Good for him. I made some money on it, so I'm happy.
I think that means he got burnt, because a year ago he was basically only trading natural gas for a while.
I got out of it the right time. Everybody, the market was still bullish on both propane and natural gas, but I had made some money on it and decided to get out. Let me see, what was it? Yeah, I got out of Oki at, well, it's still up from there though. I got out at 52, so it's still up now. But I made a nice profit up from 40 to 52 in a pretty short order. So
yeah, I've only traded it, here here and there. Just, maybe just a call here and there. Probably about a year ago is the last time I traded. I've never made a lot of money on it. I've never really lost any money either. But I know people on both sides of the fence. I know John's made some good trades on natural gas, and I guess he's made some bad ones.
That was actually a lot. I want to correct something there. That was actually a trade I made at the beginning of the year. The one that this year was actually later. It was in September. So those numbers were actually options. I was looking at my shares, so it was actually options I traded, but still made like 100% and 85% profit on a couple of trades there. So
yeah, I think when I was messing with it was when it's probably over a year now, but last year it was at one point like the lowest it had ever been in like 30 or 40 years or something like that. And once I found that out, that's when I bought in. I think it was like $8 or something. It was super low. So it was one.
Yeah, there was an argument. I'm kind of glad, especially since we had such a warm kind of year. I'm glad I got out. I got into both of those trades in September and got out of both of them in October before they I think they kind of pulled back and then kind of stayed flat after that. Look at the chart.
Yeah. I guess one more thing I have, and then we'll see if that maybe has anything else for you. But I guess the last 2 years, with the COVID thing, it's been a different type of market. There's been crazy stuff happening, crazy drops, crazy ups. But in the past year, 2021, did you learn anything new that you can tell everyone about, or that you've introduced into your own investing or trading? Did you learn anything new in the past year?
Yeah, I mean, for me, really, I kind of already mentioned it, but the thing I really learned is really how to implement options more. I know we probably talked about it more before, but just a better understanding of how they operate, how to buy and sell both calls and puts, and how to integrate those, and doing more collars and things like that. Some not super sophisticated option trades, but some basic option trades. So really, from that standpoint, from an actual use standpoint, that's probably the biggest thing I've learned. I guess technically how to trade, but from a market standpoint, I think I learned that hindsight's always 2020. It's always better. Things that you should see in the moment, you don't necessarily pick up on. The valuations in February. We never know when things are going to go down, but looking back, it should have been obvious. But after a year of 2020, you get into bad habits and think things can't go down. And there's some companies that I still believe that they always overcorrect both directions. And I think there's a lot of companies that are overcorrected to the downside now and ready to reverse. But that being said, you should take some profits along the way, not fall too in love with particular names and companies, because I've definitely done that and stuck with names that longer than I should have. And just knowing you can always get back in. It's just like when I sold Apple and Microsoft. I can get back in. I think that's where the market is right now, and I think it's the right move. And if it's not, I can buy back. So just trying to be more patient. Not letting anxiety and nerves and frustration or any of those things get to you, being willing to just walk away, turn the computer off, and let things happen. Having multiple 4, 5, 6% down days, it stinks, but the market's gonna be volatile. It's gonna do what it's gonna do, and sometimes, most of the time, anything you do is the wrong move, especially in high volatility. At least in my case, any move I make, it tends to be the wrong move, and it's time to just get out, turn off the screen, and it's okay to walk away for a day or two. And of course, with my Twitter account, I still post every day, but there's several days where I'm really just like, I didn't watch the market today. Here's where it ended up, but I don't know why it did what it did. It's just one of those days. So it's okay to do that.
Pat Baby, what about you?
We're talking about things we learned, right?
Yeah. Yep.
And for me, it was just really taking a step back, analyzing things constantly because the things are changing real fast right now. So staying on top of it, understanding what's going on, and then making sure you're being um, uh, unbiased when you're looking at your stocks. That's really what I'm trying to do, is take a step back, make sure I'm timing my buys right. I'm making sure of that because I've got the natural buy the dip mentality just baked into my head. I've always had it, so it's trying to really temper some of that and make sure I'm being smart.
Yeah, I guess for me, it's trying to hone in on the risk a little more. The like Parrot mentioned in 2020, everything was going up, so it was easy to have these big growth stocks and have large allocation to those. This past year, as it was settling down, I guess COVID's still going, but it's settling down a little bit. I've been trying to you know reposition some things, trying to when I sold Apple, one of the reasons was because it had risen so much. It was such a large percent of my portfolio at that point because it went up so much. So this past year, I've been trying to, get into, kind of diversify into different sectors a little bit more, as well as, kind of pull down some of my portfolio portion sizes, I guess, to kind of take a little bit of the risk out as we are, maybe transferring back into not a normal market condition, but one definitely more typical than what we saw in 2020. So that's all I have. Does Big Ben win his last home game tonight?
Nah.
I think he's going to. They're about to score again.
Yeah, who knows? The Browns suck too. So
he's a big game. He's a big game quarterback. He wins big games normally. It's 3rd and goal from the Cleveland 4, 7-0. So it's about to be 14-0. I don't know. Either way, Parrot, thanks for coming on. Before we let you go, do you just want to plug? I know you got some newsletters and your Twitter and all that. You just want to tell everyone where they can find you if they want to look at your stuff, or contact you if they have any questions.
Yeah, absolutely. I appreciate it. I'm on Twitter at Parrot Stock. I have a newsletter review that's you can find the link on my Twitter page. I don't know what it is. What the website is.
What do you normally post in there?
So a little bit, I do some individual stock research, a lot of sector stuff, talk about advertising a lot. I try to mix in some information on how options work. I did something on hedging. I've done a few interviews on there. I've done an interview with Seven Investing, with Simon, who's the CEO of Seven Investing. I also affiliate for him. So got a big discount going on right now, $100 discount for his annual subscription on Seven Investing. You can find that on my homepage too, on Twitter, or in my newsletter. So I'm also right now, I've got a couple of family members affected by a rare disease that they're doing kind of an end of year promotion or fundraising effort. So there's that. It's creatineinfo.org. You can see that on my Twitter page as well. I'm going to actually put a thread out about that disease in the next day or two. So I'm just trying to help raise awareness for them on that. And I'm also spending a lot of time on Common Stock now. You can find me same handle, Parrot Stock, on Common Stock, which has been going pretty good. So I like that format. Fat Baby, I don't know if you're on there or not. I think I saw you on there, but it's like Twitter, but a lot more geared towards financials. You can tag tickers and get prices and things right there on the platform. It's pretty good little platform. So
yeah, I'm on there. It's pretty cool.
Yeah. So you can find me there as well. I'm like the number 7 followed on there. So I'm like really excited about that. So it's been kind of a fun journey building that up along with Twitter. So and that's really it. don't know what I'm going to do this year different, but I do plan on my newsletter. I want to try to do more systematic training type newsletters once a month or so on how to do certain things, whether that's options. Maybe I'll get John to come on and be a guest writer and talk about features or something like that. So just different things like that to help just spread awareness to the community, help people learn.
Yeah, sounds good. And his newsletter, I think it's called Stock Squawk. If you just go to his Twitter page, it's on there, and you can click on it, put in your email, and hit subscribe. If you want to follow us, you can do so on Twitter at Swingin It, and then Fat Baby Funds is at Fat Baby Funds. He also has a kind of similar thing, a financial blog where he writes about things that he's looking at or is interested in. A lot of that's, I think, geared more towards financials, which on our normal show, he normally tries to teach us something about financials here and there. And then since Parrot gave kind of the ad to the one thing, since he's a friend of the show, I'll go ahead and give the ad to Wolf Financial as well. You be sure to check out their app. It's kind of similar to Twitter, where you can tag the tickers and look at the charts and all that sort of stuff. So it's pretty cool. We're also on there sometimes. But,
sorry if I wasn't supposed to plug.
No, you can. No. You can plug whatever.
And hey, I'm a fan of Wolf too. I'm on Wolf Financial app as well, and I'm a fan of Gav and Wolf as well. So
yeah, he's not paying us to give him ads, so we'll give him a free one. But yeah, thanks for coming on the show, Parrot, and thanks to everyone who participated and listened. If you're listening and want to refresh, this show will be out on all of the platforms on Wednesday. And I guess if you didn't listen to it, then you can listen to it on Wednesday. But keep swinging it, and we'll talk to you guys next time.
Thanks, guys.
All right. Thanks. Bye.
Bye.